This is Chad Doyne with a Tuesday, October 7 Market Minute from Trader PhD Ag Marketing. The government remains shut down. There was another failed Senate vote yesterday afternoon, and that makes it very unlikely that the scheduled October WASDE is going to be released on time on Thursday. We also had no crop progress report. Estimates for corn harvest was to be 31% complete and soybeans 38% complete. In soybeans, optimism over Trump's comments about the upcoming trade talks with Chinese President Xi popped us up to this level last week, and now it's talk about an aid package of about $10 to $14 billion that's thought to have farmers holding off on making soybean sales. Further details on an aid package is thought to be coming later this week, but the government shutdown may throw a wrench in the works for the release of the funds. The EPA is expected to end their considerations over small refinery exemptions on October 31. Their final report on obligations is due November 1. So far, what little hints have been given, it looks like they want to give a good boost to biofuel. On the geopolitical side, let's talk about Brazil. The United States is working on building more influence in our own hemisphere. We currently are in talks with Canada, with Prime Minister Mark Carney, currently at the White House, talking trade deals. Early in the Trump administration, we muscled our way back into influence over the Panama Canal. We have warships offshore in Venezuela. And last time I was explaining the currency swap deal to boost Argentina and pressure them to drop alliances with China. And now we are having trade negotiations with Brazil with a focus on tariffs on coffee and beef. Planting progress in Brazil is going great, so there's nothing bullish there right now. In the corn market, we touched a high this morning not seen since the week before last week. We've dropped back from those highs since then here today. It's nice to see how firm corn has actually been trading despite harvest pressure. In wheat, Bangladesh is set to buy U.S. wheat in a government-to-government deal. While Bangladesh is not a huge buyer of wheat, this deal would double our sales to them. So in retrospect, did both corn and soybeans carve out a trading range low on Wednesday morning last week? Last time I said it was most likely, but I still think it's true. I'm still calling these two markets mostly sideways for the next couple of weeks. Wheat is likely to trade sideways to slightly lower for the time being. Cotton keeps sliding. Last time I said that we might have another day or two lower and that major support, the low put back in April, may be touched and that I would expect a failed test. That is reaching down and touching it and then bouncing back higher. One more good move lower and we're there. But then I think this sell-off will be exhausted. It came across the newswire that China's cotton imports are at a 20-year low. Not our cotton exports to China, but their whole cotton imports as a whole. In fats and feeders, screwworm was found 170 miles south of the border. This is the second in 2 weeks in the same region of Mexico. Feeders are higher on screwworm fears. The price of boxed beef is the lowest in 2 months, but live cattle are a bit higher, following feeders instead. This is part of what I was talking about last time. Pricing some fats and feeders at this level requires limiting price risk of the market surging higher if screwworm pops up north of the border. Buying call protection today is now more expensive than it was last Thursday. If it looks like we're going to get close to a new contract high in November or March feeders, you may want to drop any short hedges you may have. If screwworm is found when the markets are closed, then you would have wished that you had had some call option protection ahead of time. Trade smart. Set up pro moves to handle touchy situations like this. And if you need help, just send us a text that says hedge and we can reach out to you. And in hogs, where's our leg higher? We got the pause right where we thought it would happen, but now hog futures are down today. Will we take out last week's low on a little failed double dip? Hogs are in danger of a short-term slip, but I'd like to give this market a little bit of time to form up. Hopefully on lower volatility where we can take market movements a bit more seriously. High volatility jabs lower, like what we've seen, can often be false moves. Gold is still surging. Spot gold is almost $4,000 an ounce. Russia is under pressure. Ukraine has been striking Russia's oil infrastructure with drones, and the United States is putting pressure on countries like India to stop buying Russian oil. Revenue from Russian oil sales keeps fueling their ability to wage war against Ukraine. Be watching for the next steps the United States takes in geopolitics. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.